Just a minute. Going to live stream. All right, think. Perfect. I think you're good to go. So before we go further, I remember yesterday we had an issue with our website, but it's been sorted out. I had to work on it overnight. So you can go online right away. I want to share my screen. Go online and search for our website. It's called etribeconcept.com. This one here. Then you can create an account. There are some materials that I've already attached, which will be good for. I'm streaming this session so that even after this, I'll be able to, share the link. In case somebody misses anything, you can always go back and rewatch. That's why I normally do the recordings, right? So just go to this website, etribeconcepts.com. So our website. You can click on sign up and create an account. If you already have an account, and just log in. I hope, yeah. So once you log in, you're going to access this dashboard as a free member. And we have our courses. We have everything set here. Then we have this section written recommendation. On the recommendation, those who don't have an account with HFM, you can click on visit website, right? The recommendation, you can click on this section, written visit the website. Once you click on it, you can easily create your account. And then also on the trading view section, you can also click on it and create an account with trading view. And then if you want to download MT4 and 5 on your laptop, you can as well click on this. If you're using the phone, the same can as well happen. And then there's a learning platform that we have linked called Baby Pips. You can, for beginners, those who are totally new, you can tap on that section as well and be able to start learning the basic, specifically for beginners, right? So you can as well check on that. I think that's what you have for now. As we go on, I'll be sharing much information. So that is it. So let us just jump into today's class, which is all about. Let us jump into today's class, which is all about market structure. Our class today is all about market structure. But before that, I want to talk about let us talk about market structure. So there are three things that are very, very important when it comes to trading, when it comes to doing analysis. One of the first important thing is, okay, we have technical analysis. We have technical analysis. We have fundamental analysis. And we have what we call sentimental. I don't know if the right one, sentimental analysis. So these are the three things that you need to understand, how to interpret them for you to be in the right position to be able maybe to do analysis and make a decision when it comes to executing a trade, all right? So we're going to focus on technical analysis and under technical analysis. Technical analysis is simply the process of being able to read previous historical data so that you can gauge future probabilities when it comes to the market, right? So we're going to learn about technical analysis. Under technical analysis, I'll be dropping another material tomorrow, which is called the Candlestick Bible, which will help you to learn the basics things like different candlestick patterns. Whenever you see a certain candlestick, what does it mean? The candlestick Bible is going to help you learn about the basics of price action. Are we together? So the candlestick is going to help you learn the basics, which is all about the basis of price action. That's very, very important, so that when you get to other things, you can easily understand what is happening. So allow me to start with my first topic under technical analysis, which is market structure. Market structure. Not sure. Market structure. If the spellings are wrong, it's so long as you understand. The most important thing is market structure. So what is market structure? What is market structure? Market structure is the process of being able to determine the direction of the market, looking at the candlestick behaviors, so that you can determine, is this market buying or selling, or is this market, ranging and all that. So when it comes to trading, we have three price movements. We have three price movements, whereby we have bullish. I'll say we have a bullish trend. We have a bullish trend. Sorry. I hope you guys can be able. Are you guys seeing my screen? Are you guys seeing my screen? I want you to confirm to me if you guys can see my screen. Okay, so we have market structure. Under market structure, we have three trends. We have a bullish trend. We have a bearish trend. We have a bearish trend. And we have a ranging, or sometimes we use the word consolidate, a consolidating, ranging or consolidating market, So when you say that the market is bullish, that is an indication that the market is buying. When you say the market is bearish, that is an indication that the market is selling. And when you say that the market is ranging or consolidating, we don't have a clear direction. It's moving on equal measures. It's buying and selling at the same time, moving from certain levels to specific level without breaking some other zones. So from my previous, let me show you from my previous notes, I want you to understand this. So we're going to learn about this, and then we're going to learn about trend categories. Learn about trend categories. And then, categories. Then we learn about key levels. Then, after we've learned about key levels, trend categories, key levels, what else? Yeah, I think this is what we need to learn for tonight's class, or rather for this specific session under this topic of market structure, right? So that's what we're going to be able to cover tonight. I hope you guys are very, very ready to understand all of these things. All right, so we have bullish, bearish, bullish, bearish, ranging market, trend categories, and key levels. So I think I've got some notes. Market structure. This is what I was talking about. Under market structure, the market structure defines the overall direction and behavior of price, categorizing it into bullish, bearish, or ranging environment. A bullish trend has a characteristics whereby the market tends to form a series of higher highs and higher lows. I'm going to elaborate that to you guys, right? And then a bearish trend, it has a characteristics whereby it forms a series of lower lows and lower highs. And then for the ranging or sideways structure, or rather the consolidating market, price moves horizontally between defined horizontal support level and resistance level. So I want to talk about the theoretical part, and then I'm going to the practical part of it to show you what I'm talking about exactly. And then we have trend categories, if I'm not wrong. That is 2026. Sorry. Let me not mix these notes. Just a minute. Yeah, we have key levels. So when you talk of key levels, this is simply support and resistance. So let's start with the first one, then I'll go to key levels so that I don't confuse you guys. Or we have the counter trends, which is also very important. So we start with the first one, market structure. These are simple things that I want you guys to understand. To move smoothly. So let's start with market structure. So when we talk of a bullish trend, theoretically, price tends to form a series of higher highs and higher low. And when we talk of a bearish trend, price tends to have a tendency of forming a series of lower lows and lower highs. So these are scenario indicating a bullish structure. So going to see price moving randomly, So something like this. So this is a structure that gives us an elaboration of a bullish trend. So when the market is bullish, overall direction, the market is bullish, overall direction, we're going to have price forming higher highs. When I'm talking about higher highs, this is what we call higher highs. Higher high. I'll change the colors. Higher highs. You can make this to be blue. And then from higher high, you're going to form a higher low. A high and a higher low. We have a higher high and a higher low. Let me put it together. Higher high and higher low. Then we have higher high. So when the market is bullish, it's going to form a series of higher high and higher low. So from a higher low, once a higher low swing point closes above our previous higher high, it creates a structure we call, it does what we call record structure. So that becomes our bullish record structure. Are we together? That forms what we call a bullish break-off structure. So we have that higher high. So this turning point whereby sellers came in and did some slight pullback is what we call a higher high, this one here. And then this turning point whereby sellers ended and the buyers started buying, we call it a higher low. So from that area, so in this case scenario, when price moves from a higher low to form a new high, I'm going to give you some tips and tricks to define the correct higher highs and higher lows. So we have another higher high, then price did some slight pullbacks, then created another higher low. So again, the moment a higher low comes and breaks a higher high, that area becomes our valid break-off structure. That area becomes our valid break-off structure. Are we together? I hope you guys are following. So from a higher high, price, when the price is pulling back in a bullish trend, it's going to form a new higher low before it continues with a trend. So from this, again, higher low, we're going to form a new higher high. And that is the expected sequence in a bullish scenario. So from a higher high, again, price comes and forms a new higher low. And as long as price breaks, there are different ways on how we tend to map this structure. So from a higher, what do we call it? From this higher high, from this higher low to this higher high, as long as body candlestick has closed above the highest point of the higher high, we also have another confirmed BOS. So again, from this higher low, we're going to form a new higher high. So this is the last area we had buyers settling, and then you could see sellers again coming in to form a new higher low. So and this tends to keep on repeating. So whenever you see such a structure on your charts, this is an indication that the price is on a bullish. The price is on a bullish trend. So these are some sort of a bullish trend. Price is forming a bullish trend, whereby it's going to form a diagonal support and a diagonal resistance. All right. Somebody is asking, from which point do you start measuring a bullish trend? You measure a bullish trend from any discounted price level. We look at highs and lows from key levels. And again, it depends with what kind of a trader you are and the time frames you're using. As you go on, I'm going to help you understand everything. So we're just on the introduction part of market structure. So don't worry. By the time I'm done with market structure, all the questions that you have, I believe they will be answered automatically. As long as you'll be on the you will be in all the classes without missing. So if you will be here from all the classes, trust me, you'll be able to learn everything. And the good thing is, as I'm doing these classes, the AI is doing the summary for me. So I'll be also sharing the summaries with you so that guys can really learn. So this is a scenario showing us that price is bullish. These are the characteristics of a bullish trend. So again, from that this higher low to this higher high, price breaks to the upside. That is a clear indication that we are on a bullish trend. So when this is happening, how will we know that the market has changed from selling? How will we know that the market has changed from, buying to selling? But before I talk about that, let me just talk about the bearish structure. So for the bearish structure, we're going to have something that looks similar like this. So price will be selling from the supply, heading to the discounted price levels, right? Price doesn't move perfectly, it moves randomly, right? Price doesn't really move perfectly, it moves in a random manner. But there are characteristics of the things that you need to look at. So this is a scenario. This is an example of a bearish. This is an example of a bearish structure. Are you together? This is an example, rather a scenario of a bearish Let me try to make these lines a bit bigger. So this is an example of a bearish structure. Yeah. So characteristic of a bearish structure, the market tends to form a series of low lows and low highs. So this one becomes our low low. This becomes our low low. And then on the extreme end, we're going to have this area, we're going to have a low high. And as long as price comes and you see this corner, as I go to an intermediate level, you see this turning point here. We're going to have two candlesticks, maybe a bullish and a bearish candlestick. So the wick that is longer between the two candlesticks is what we mark as our low in this case scenario. So if we're going to have the market coming lower like this, then maybe we have price breaking below this with a body candlestick. That's when we validate that these areas become, or rather, this trend has been validated to be bearish, and this becomes our break-off structure. At the same time, that's a confirmation that you're on a bearish trend, right? So, having said that, trying to look for my, where is it? Having said that, this becomes our BOS. Sorry. Just, I mean, these, let me delete. There's some tools that are messing me up. So I'm supposed to delete everything at once. Just delete this is one at a time. So this becomes our BOS. This becomes our bearish breakout structure. We have bearish breakout structure. So this becomes our bearish breakout structure. And then this becomes our lowest point. Again, once price does that, from as long as this higher low, this lower high, the last lower high we had is this, as long as it breaks and it continue breaking the next lower low, then we continue validating this as a bearish trend. I hope you guys are learning. So from that lower low, we're going to form lower high, we're going to form a new lower low. In short, from this level, price buys to this one, but since sellers are dominating this trend, that's why the market keeps on breaking to the downside. It moves from this lower high, comes to this lower low, again goes back to this lower high, and from this lower high, that means the momentum of sellers, or rather, at this particular price action, the dominating participants are the bears, or rather, those people are selling, or the participants who are sellers. So it continues forming a sequence, or rather, another series of lower lows and the lower highs to the downside until something happens. That's when we know that the trend is changing from being bullish, bearish. So again, we're going to form another low low, and we're going to form another low high. So from these again, we're going to have a breakout structure. We're going to have another breakout structure, and the series tends to continue in that manner. And the series continues to continue in that manner. Right together. So you're going to have another breakout structure here. We're going to have another structure lower. So from this low, low, we have a low, high, low, 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 high, low, 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 high, low, 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 high. And the series continues in that manner. I hope you guys are following. So that is a scenario, or this is an example of a bearish illustration, all right? Now, let's talk about arranging market. When you talk of arranging market, this is a market that forms with equal measures, something like this. Of course, you're going to have minor trends within the consolidation, but you realize price is going to form something like equal highs and equal lows. Price moves randomly, but there are zones that it doesn't break. So these are market that I always tell people, unless the ranging is happening on higher time frame, but if it's in the lower time frame, avoid. So when you look at these, it's like the market is forming a series of equal highs and equal lows. So these are highs. And then we have the lows. The higher highs and the lower lows. So something of the sort. The high highs and the low lows. Right? So this is an example of, or rather an illustration of ranging market. Arranging market. An example of a arranging market. So we have arranging market. We have a bearish market. Sorry. Bearish. An illustration of a bearish market. I think we've seen that. Then we have, sorry. Ready for that? We have a ranging market, we have a bearish market, and then we have a bullish scenario, bullish market. So these are the basic things that you need to know about a bullish market structure, a bearish market structure, and a ranging market structure. So we have that. So this one now, it's a bullish illustration of a bullish market structure. Bullish market structure. Are we together? Now, from this, I want you guys to confirm if you're together before I go on. I want you guys to confirm if you're together before I move on. Just type on the chat section if you're following and if you're learning. Just type on the chat section if you're following and learning before I proceed. I need to know we are together. I might be making a lot of noise and maybe yet guys are not here. Just type on the chat section if you're following and learning. All right, you guys are following and learning. I've seen your comments. Okay, so I want us to talk about trend categories, and then I'm going to go to the real charts so that we can continue. So if you want to take a screenshot of this illustration, you can. But the good thing is I'm recording this session live. So after this, you can go on our YouTube and be able to access this recording. So let's go to, so we were talking about the basic market structure scenarios. We have a bullish, bearish, and we have a ranging market. So now let's talk about trend categories. Let's talk about trend categories. When you talk about trend categories, the counter trends. Sorry, counter trends. Counter trends, they are simply, or rather, basically, these are basically these are our. Sorry, these are just a moment. Just a minute. Yeah. So when you talk of counter trends, these are pullbacks and reversals. So when you talk of pullbacks are basically temporary moves against the main or the primary trend. I'm going to show you that in a few. And then the reversals, these are shift. It's a significant, long-lasting change in direction. This happens when the trend breaks the crucial structure, such as an uptrend breaking below the previous higher low, giving an indication of a potential shift to a bearish trend. I hope that is very clear. So I want to go to the charts and explain from the illustrations. I mean, I'm going to my structures, and then I show you what I'm talking about. Then I'll go to the charts to show you a live example. So we start with the bearish scenario. When you talk about bearish scenario, you see this move from here. Clearly, this is a bearish trend, and all of us, we know that. This is a bearish trend. Just a moment. Just a minute. This is a bearish trend, all right? And if this is a bearish trend, that simply means from here, is my screen hanging? Sorry. So these are bearish trend. I'm trying to, from this particular point, I think I'll just circle it. Or I'll use, I don't know, my screen is misbehaving. So from this point, where we have a low high to the next low low, this is a continuational move of the bearish trend. And then from this low low to this low high, this is what we call, in this case, we're going to call it a pullback. We're going to call it a pullback. Where's my tool? Gotta call these a pullback. Can't see my whatever. So this one here, you see from this low low to this low high, this move, we call it a pullback, or you can call it retracement, pullback or retracement, pullback or retracement. Sorry if my spellings, as long as you understand. And then the low low from this low high to the next low low, low high to the next low, this move from here, we call it a continuational trend. You can call it a continuational trend. So here is the continuational trend. Let's use the words expansion and all that. So we call this a continuational move, continuational trend. So this one is a pullback from the low low to the low high, and then from the low high to the next low low, we call it a continuational trend. That is for a bearish scenario. So when you talk of counter trends, as a trader, I always advise my mentees focus so much on trading towards the direction of trend than against the trend. Reason being, pullbacks are not guaranteed, but the continuational trends are better. So when it comes to the percentage of risk, when you trade towards the direction of the trend, you could have maybe a win rate of 80-20. But when you're trading pullbacks, you can have maybe a 60-40 win rate, and so on and so forth, or maybe 50-50. But when you trade towards the direction of trend, you're going to easily have higher win rate. Although there are several factors that I'm going to also elaborate so that you guys can have a better understanding. I believe by the time I'm done with teaching my strategy, you'll be able to understand how to execute some specific trades, either it's a pullback, reversal, and continuation, right? And then now, when you talk of a reversal move. So this trend, this was our last swing point that was very important, this one here. So if at any point, you see this area where we have this low, if price tends to come back and start maybe doing something like this, it comes and break this previous last low high that we had. If price tends to come back and breaks this last high low that we had, now this becomes our reversal, or rather, in my strategy, I call it a shift. So this is what we call a shift of price. Price is shifting from a bearish trend. Now it has started giving us an indication that we are about to buy. So whenever price comes and break the previous stronger low high or major low high, which is a swing point, we now know that the trend is going to change from bearish to start buying. Are we together? We're going to change from a scenario of now we're going to start having something like this. So maybe the market will pull back to this level, and then now start buying and moving to the upside. I hope that is clear, guys. So whenever you are on a bearish trend and you had a previous stronger swing point, in the bearish scenario, it's a low high. If price comes and you have body candlestick closing above this level, then that simply means you're going to have a shift. So we are now going to change from selling to start looking for buying opportunities, right? That is for a bearish scenario. I don't want to complicate anything. I want to make it simple and easy so that when I start going to the charts and giving real life situation on the market, you totally understand what I'm talking about. You'll totally understand what I'm talking about. So this is a bearish scenario. Are you together? Now, for the bullish scenario, we're going to have this, whereby the market is buying, forming a series of higher highs, and then they move from this higher low to the next higher high is what we call the continuational trend. They move from this higher low to the next. So all the high low to the next high high is the continuation of the higher low to high high. And then all the moves from higher high to higher low, we call them pullbacks, or rather the retracement. So in this case, this higher low is our continuational trend. If you don't mind my spellings, not interested. I'm interested with you guys understanding what you're talking about. Spelling. So continuational trend. And then this one is our pullback. You see where we have the higher high to the next higher low. In short, this move. So we call this move, we call it a pullback. Pullback. Or rather, sometimes use the word retracement. Right? So we have continuational trend. We have pullbacks from a higher high to the next higher low. We call it a pullback. So when I'm talking about swing points, these are strong zones that create impulsive moves. I'm seeing somebody by the name Anne. She's asking, kindly, I'm going to repeat that. Don't worry. I'm going to the live charts. This is just illustration purposes. But I'm going to the live charts to show you real examples. So we have higher high, higher low, higher high, higher low. So all for a bullish scenario, when the market is moving from a higher high to the next higher low, we call it a pullback. So this is another pullback. Let's see if I can clone this. So this one here is also another pullback, right? And so on and so forth. This one is also another pullback, continuation and so on. So this You see this area where we have our last higher low, for example. This is the last area that we had buyers dominating, unless we have another move and so on and so forth. So this is the last area we had sellers coming in. So if the market start coming lower, and you find the price coming to trade below this higher low, this is what we call a shift. We call it a shift, okay. We call it a shift or a reversal. We call it a shift or a reversal. So we call it a shift or a reversal. So this one is what we call a shift point. If price comes and trades below the previous, or rather the last stronger swing point that we had, so you need first of all to determine the direction by getting to understand the structure. Are we bullish or are we bearish? So that's the first thing that you always consider. So if we have a scenario whereby the market comes and trades below this level, see this level. If you have a wick here and price comes and trades below this level, we call this a shift. Sometimes you use the word reversal. So, but my strategy, I use a shift of price. So price is shifting from a bullish scenario to a bearish scenario. So if you have something that this market maybe reaches here, doesn't continue buying, and then maybe it comes and trades below this level. So we call this a shift. We call it a shift. So this one becomes a shift. So once we see price shifting, we now start looking forward to see the market doing what? We now look forward to see the market starting to form a series of, start seeing price forming a series of, price goes back and now start maybe forming a series of low lows and low high. I hope that is clear. Have we understood up to that point? Before now I go to the charts and give you chart examples. Yes, it can still break the higher low and continue being bullish. What the market does every time, price is always seeking liquidity before it moves to the next section. So up to that, those simple illustrations, have we understood? Because I want now to give you practical examples on the charts, how the market moves. I want you guys to confirm, understood the chart section? I'm just looking at the chart section to see if you guys are getting it. You know, the purpose of learning is we understand these things and then you apply on the chart. If you don't understand this, I'll be wasting my time. I've only seen Adan, Albert, Brian, David. Okay. If you have understood so far, so good, please drop that on the chat section. Because before I go to the, so we have now started learning simple things of analysis, market structure. Once I get into advanced things, this is the basic foundation of technical analysis. If you don't understand this, you're gonna have a problem. Now, I'll be dropping a document in the group tomorrow, or maybe after this, called the Candlestick Bible. You can go and spend your time to go through it. So now I want to go to, I want to show you practical examples. I want to show you some practical examples. So allow me to show you some practical examples. I'm going to show you guys practical examples. So let's use an example of GBP USD. Just to, sorry, just a moment. So these are trades that I had last week with members. It was one to, let's see. I hope you guys can still see my screen. It was a GBP USD opportunity. Let me go to H1. It was a one to, what's not happening? Oh, understand. Sorry for that. So it was a around 1 to 4 or 5, if I'm not wrong. Just a moment. This trade, talking about this specific trade, it was a 1 to 5 something. Yeah. So 1 to 6 actually. We had this very nice trade, and then we also had another trade the other week delivered based on what is happening right now. That's why we had this crazy push to the upside. So if somebody was holding this trade by now, they have an RR of 1 to 20. Don't be surprised, guys. When we go on with the classes, you'll be surprised that my stop loss is ranging between 15 to 30 pips maximum. So I know as we continue learning, I'll remain with a few people. That is okay with me. Even when the journey starts, not everyone will go to heaven. Others will go to hell. Others will go to heaven. And that's what actually I want. I just want to remain with few people who are committed and serious to elevate. So when I see people leaving meeting, we'll start maybe when we are 30. By the time we are done with the classes, we'll be remaining maybe with 5 people. And these are the people I want to put all my energy to. And my focus towards to. So we now come to the live scenario. In a chart example, we have all these. Let me just delete my charts and show you practicality of what I was talking about. So when you look at this chart, for example, let's just randomly select a section. So like we have this area. I have these areas. So when you look at this trend, clearly you can see we have a bearish trend. The market is breaking structure towards the downside. And this is 4 hours time frame. Market is breaking structure to the downside, right? Price is moving structure. Market is breaking structure to the downside. And you can clearly see that. Now, I want us to look at this trend and talk about the things that I was mentioning. So starting with, we can start with, before we start selling, I want us to look at the last higher low that we had, started to help us make a decision of price shifting and changing. So our last, based on what I can see on the chart, our last higher low that we had is this one here. I want to show you exactly. So we had our last low high at this area. Hence, creating what we call a shift point. So that simply means initially the structure of the market before it was bullish. But since we already have a shift at this level, that is an indication that price is moving from a bullish trend. Because if you look at the chart clearly, we were on a bullish trend from here, from the downside here, we were on a bullish trend. And then now the market has started doing what? The market has started selling, right? And how do you confirm that the market has started selling? The moment you had a candlestick body, let me zoom this for you. The moment you had this black candlestick closing below this, that was a clear indication that now I'm talking about this zone being broken. The moment price came and we had this body closing below this level, that was a clear indication we are moving from a bullish trend to a bearish direction. Are we together? Remember, this is on 4 hours time frame. So after that, we now start seeing price forming a series of low and higher low. So after that, price has a behavior of trying to go to any immediate area of liquidity which has not been mitigated or been tapped. As you go on, you'll understand deeper aspect of liquidity consumption. You'll also be able to understand how the market moves, and when prices move from one zone to another, what is it seeking for? So this is our last, after the shift, this is our last structure that we had, which on simple price action, we call these a bearish engulfing candlestick. We call this a bearish engulfing candlestick. And whenever you see a bearish engulfing candlestick, it's an indication that price is about to continue selling. So after this bearish engulfing candlestick, on the candlestick Bible, we're going to learn about this. I'll give you those notes. So on the candlestick Bible, we're going to learn that. So we have this bearish engulfing candlestick. So price from this zone came and broke this, let me label it. This was our last higher low. Sorry, we had our last higher low here upper. And then the market tends to go back to this area, which is our supply zone. Let us just call this bearish engulfing. Bearish engulfing candle. We have a blue and a black candle. For me, blue means bullish candles, then black means bearish candles, right? So from these bearish candles, we see price coming to retest these, the normal, okay, those people who trade smart money concept, they call this an order block. But as far as my strategy is concerned, we call this type 5 area of liquidity. We're going to be able to understand that. And when it comes to these types of areas of liquidity, we have several situations and scenarios that we consider in terms of entry models, right? So we have that level. That's why after price breaking this zone, we could see we had this slight pullback. There was like a slight pullback from this low. From this low, we had this pullback that came all the way up to that area where we had a bearish engulfing candlestick. And then from there, we had, from that area, we had these low. I mean, we had these, what do you call it? We had these, sorry, it's called a low high. We had this low high, which came from this low high. Price came to break this area now that became our low. Hence, we had an internal, okay, we had this break of structure to the downside. As long as we had a body candlestick closing below that swing point or that week. So we had a break of structure, which was bearish. I hope now you guys are relating to what I was talking about, illustrations to the real chart reaction. So we had these surprising break. Your candlestick will confirm bearish break of structure. Then from there now, we see another, let me remove this noise. I think I can remove this noise now. We start seeing price again coming back to the origin. Let me remove this, or I can make it a little bit smaller. Make it 18. Yeah. So from this bearish engulfing candlestick, we had this low high, and then from that low high, price came and created this extreme lower low, which was at this end. So we expect if price will come lower, we expect the market to come and trade below this. Are we together? We expect price to come and trade below. So we expect price to come and trade below this so that we can have another break of structure to the downside. We expect price to come and trade below this to create another break of structure. Are we together? So that simply means from this higher low, so from this lower high, price created this lower low. So all of these move towards the next probably higher low. We call it a pullback. Are we together? We call it a pullback. So happened to on another low high. You have another low high. Then another low that we expect price to break. So the moment the market comes and trades, where's my tool? I'm looking for my replay. Oh, sorry, it's here. The moment the market comes in, the moment price comes in, have a candlestick that is trading below that, boom. That's when now we have a clear BOS confirming that you're still bearish. So from here, as the market goes down again, you see price retracing. This was the last stronger zone that created. So we have these high low price did some pullback, nini for the internal structures, came and created another low high here, right? And then the market came, tapped, continue going lower. So we have another break of structure. Are we together? We have another break of structure, which is here. I know sometimes people mark these things wrongly, so I'll show you how to mark them right so that you don't make errors. So you have another bearish break of structure to the downside, and the price continues, go lower, comes back, forms another new break of structure. Where is the next break of structure? It is on this level. So our break of structure is here. I know somebody will mark here, but for me, it's here. I'll give you reasons as we go on. So that's how you mark. This is our break of structure. Then, from that break of structure, so we have this low, low. So we have this low, low. And we have this low, high. Another low, low. We have another low, high. And as we continue playing price, we see the market doing another pullback, and then boom, comes and breaks this low. So we have another low, high at this area, right? Then we have another new low, low. I hope you guys are enjoying your learning, eh? So tunakuwa na another low, low hapo. As long as price imevunja, ina confirm. Kuna characteristics ama kuna things that we look at to confirm that the trend is still intact or it's changed. So this is another BOS. So price has a tendency of going to the areas of liquidity. Trust me, as long as you stick to this class, you're going to be able to learn and understand my strategy. Then from there, boom, here we are. So you see, in this case scenario, this is our last, there are bases that we look, this from my understanding, my strategy, these are very significant area. We call this type 1 area of liquidity. Other people call it an order block. Simple price action, we call this bearish engulfing candlestick. Kuna watu wanaita hii order block or OB. Me, I call this type 1. You'll understand as time goes, but that's why price came to this level, consumed liquidity on lower time frames. I'll show you how to analyze your chart using time coordinations. You lower down to even minutes to get a refined entry with lesser risk. So from that now, you realize that price has already done a shift. Price has already done a shift. So from this low high, sorry, let me show you. From this low high, see this low high? This low high. Let me show you with an arrow. This low high, here hapa. Let me mark it correctly. Yeah, somewhere here. It came all the way down, broke these, and broke these. So this is our last low high. And then, if you look at this level, see this one here. Price never went low. But which was our last swing point that broke this low. So tuko na another high. These are low high, internal low high that created this low. So tuko na internal low high. Okay, or rather I can call it a minor structure. We have major and minor. So tuko na hii low high ambayo ilikuja ikavunja, ilivunja hii major, but haina major, haina minor yake. So ilivunja hiyo major. Okay, oh yeah, sure, it's here. So we have a small BOS. If you go lower, you'll see a small BOS around hapa. This is internal. This is in here. So when that happened, it's an indication that price is having a tendency of changing. So from hii level sasa tuna wakati hii price ilirudi huku juu in minor structure na ikakuwa na body candlestick closing above this candle wick, this became what we call a shift. And when a shift happens, it's an indication that the market has changed from the major trend. It has, I mean, the market is shifting from the main trend that we had to a new trend. So we are now shifting from a bearish trend, which was this one, to a bullish trend based on this structure. So tukiangalia hapa, that's why if you look at this, my students understands how most of them, they took these trades here. I remember most of them, they took these buys from the other week. They took these buys. If I will show you. So price comes here and does what? These sorry. After that shift, price goes for areas of liquidity. As far as I'm concerned, my area of liquidity is based on these levels. Let me show you. There are ways. I'm going to teach you around 8 entry models. Once you master them, you're going to be on another level. So these are type of liquidity that I look at. So price had to come inside this zone. We did our refinement in 5 minutes, 3 minutes, and we were able to see what price did. So the market came extreme lower within that zone. And then after that, boom, ikainua. So after having this, after the shift, now we're having a break of structure. So I know very well going now to start having a series of higher highs. So in short, we are bullish on GBP USD. In fact, the current price, now this is a BOS, bullish break of structure. So we are now going to change, continue buying. So since price has done this, the market is going to come and react on an area of liquidity, and then we continue buying. So there's a way we also refine that. So as far as I'm concerned, now my next area of liquidity that I'm interested in, we have this zone and we have this level, which is my validation point. And I have an invalidation point. Let me see. I'm looking at the aspect of consumption. So we have this area and we have this. So if price comes lower, I'll even be looking for more buys. Where is this? If price comes here, I'll refine here. Sorry. If price comes to this level, I'll be refining and looking. I'll start looking for buys and I'll target my levels based on the structure that the market is going to form for us. So to just prove for you that whatever I'm telling you is what we normally do. If you look at, just a moment. If you look at, this is our Discord. I share this setup with members here. If you check on my section on Discord, I share these GBP USD trades. Like this was the trade before it happened, right? At a lower time frame refinement, it was an intraday. This was on 31st of March. Then the trade came to our levels and delivered to us around 1 to 5R. This was our GJ. Which one? This one gave us a few pips and then we were taken out. This is the last trade that I shared here on Discord. So the point is, because time has gone, time has really moved. I want to ask you guys, have you been able to learn anything today? I might not be able to finish up everything tonight. I might not be able to finish up whatever I want to. So I'll pick up from where we've reached tonight, tomorrow. So, but a question for you guys, have you learned something? Have you been able to learn something? Have we learned? Tumesoma, tumeelewa nini? Have we learned something? So, just to wrap it up, just to wrap it up, the usual things that we do. My assistant has told me that most of you guys have already sent you've sent, what do you call it? You've sent your HFM accounts on to his number. He's going to be able to check all of them. He'll be responding to you one by one because you guys are many. If you came here and you have not done that, make sure you reach out. This is the number. You forward your HFM account. If you have created, make sure you forward. If you have not, you also let us know so that Let me show you. Let me show you, what do we call it? Let me show you the number. I'm gonna post the number that those who have not been able to do so, you can do it. It's already 9:30. Time is moving very fast. Muda unayoyoma. Make sure you text this number. Make sure you text this number. This one here. 07 07 07. Once by the end of this week, there are people will not be able to access this class. I'm sorry, because I'm going to, through my assistance, is gonna be able to tell me those who have created the account, because you're going to start trading together as we move on. 07 57 66 81 48. So make sure you text that number and drop your HFM ID. This one. Make sure you text that number on WhatsApp. Yeah, your HFM. Come on. Even if you have not been answered, you'll be answered. But if you have not texted your HFM wallet ID, do so. They'll be following up so that they confirm. The reason as why we're doing that is because of HFM is the one who sponsored this hybrid masterclass, right? So make sure you reach out to them. Is there anyone who has a question up to this point? Yes, we have, especially the market structure. The market trends are quite interesting looking to study. I'm going to break down things for you as we go. I'm going to make it easy and simple. Trust me, by the time we're done with these classes, you guys will be on another level. Trust me on that. Especially this area of market structure, I need to learn more. So I'm gonna do more. That the good thing is I've recorded this on YouTube. You will be able to learn that. I'm going. I have to finish whatever I'm finishing before I go to other topics. So Adam is saying talk about liquidity tomorrow. That is a topic that will, once we reach on that topic, I'll talk about. I'm not yet done with market structure. I'll finish up with market structure, show you several examples. And then tomorrow is on Thursday. Oh, so tomorrow is our last class for this week, and then I'm going to give out assignment to be done throughout the weekend. So on Friday, Saturday, I'll be responding to those guys who don't have, especially on Friday, whom the accounts are not yet settled, so that they have the account. So that when you start on Monday, everyone should have their account set and ready, so that you continue the class. So in Amanisha, your ticket to be joining classes for next week is your HFM wallet ID, because I have to confirm. I'm going to be talking to them. So if you don't have an account and it's not registered and linked to whatever we're supposed to link to, you'll not have access to the classes. So, yes, does the Discord server have signals? Yes, we do share signals in there. And we also do recaps or in our community. So this is a community that not everyone accesses. You have to qualify. Where is it? This is our Discord server. For you to be in our Discord server, you have to qualify. We have so many things. In here, we have community announcement. Like for instance, I'm going to have Eldoret Masterclass. I've already posted for members. They're aware. And then we have fundamental updates. You know, when anything is happening, like we always update guys to understand. We have members area where traders share their ideas. You know, we have areas where students submit their assignment. So for you to, not everyone will access this code. You have to qualify for you to be allowed here. It's not for everyone. So here is where we share the, what do you call it? We share, if you do an assignment and you are having an issue, we help you have an understanding. You know, we have coaches and people who are experienced enough, you know, and all that. Then we have, we're creating a place where we're going to guide on how to do proper journaling. There are some free materials as well here. So many materials to help you learn. We have deep liquidity concepts inside here. This one is deep. Like there's a day I was giving out illustration. This is an example of, we call it inducement liquidity engineering entry. It happened, it was in 11th of March. I gave this entry to, had an RR of around 1 to 18. You know, people wonder, people say that you cannot have an SL of 20 when it comes to 20 when it comes to gold. Depends with how you trade and your strategy. So there are all these, there's a lot of value in this Discord. So probably maybe by the end of this masterclass, some of you guys will have a chance to join us. and there are some deep stuffs we're gonna break down kundani. Sawa sawa. So for now, as usual, please go to my, where is it? Go to this account. This one. Go to this, where is that post? Go to this specific post. Which one was it? Was this one? Let me go back. Are you in the right place? Go to these, just a moment. Go to this post written, learn to trade as you earn, and drop a comment if you have learned anything. I don't know why, maybe it has not refreshed. The page is on Instagram. It's called eTribe Concepts. Go to that page. Just a moment. Maybe I need to refresh. Yeah. Just a minute, guys. Yeah, go to this page on Instagram. It's my personal, and then this is our academy page. This one here. Then go to this specific post and drop a comment on what you're learning, the value you're getting, and like that post. Gonna do that. By the end of this masterclass, I might be giving out people some awards sponsored by HFM. I'm gonna be giving out people awards and other things. I might even decide if anyone qualifies in whatever I'm looking for, I'm gonna give them. Maybe I can decide to give some money. But anyway, the value that I'm giving already is enough. So stick around, keep on following. So up to this point, guys, lastly, as we go on, all of you come to this website. Is called etribeconcepts.com. Create an account. Just go to Google and search for etribeconcepts.com. etribeconcepts.com. Or I'll post the link on WhatsApp. Then come and sign up an account for free. You're going to have access to our website. We have already put some platforms that I personally recommend where you can continue learning, can keep on learning. If you already don't have an account, you'll come and click on HFM trading platform, create an account. If you click on that link, it will direct you to the HFM website, and you can sign up an account and you have it. Once you have your account, come to my inbox. Come to that number, his inbox that I've shared, drop that, and then we have some free materials. We have attached the Baby Pips website here, and also tap on it, and you start learning. Beginners specifically, start learning from there. So, guys, allow me to end it here. We meet tomorrow. At exactly 8 p.m. as we get ready for next week. So does the Discord server have signals? Will we do recaps? Yes. For these classes, will we do recaps? Yes. We're going to be doing analysis and doing recaps together. Also, that's from Yon. So you guys have a lovely night. See you in tomorrow's class. I'll share this link immediately so that you can go back and watch the recording. Adios.